Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you with our weekly stock market analysis for the week of November the 10th, 2019. As we begin this week's video, I want to begin with an apology. Still recovering from a pretty strong cold over this past week as frigid temperatures go across the majority of the United States. So hopefully you're feeling well. I'm still recovering, but still going to try to provide some information to you this week. A pretty strong week overall as stocks continue to push higher, with all indices, excluding the Russell, making all-time highs. Markets moved with good volume momentum this week on strong corporate earnings reports and positive news in the U.S.-China trade negotiations toward the latter part of this past week. We are approaching the end of overall earnings seasons, with nearly 90% of all S&P 500 companies having released their earnings reports, with approximately 80% of them beating and or exceeding their overall estimates. This continues to bolster the overall market on fundamentals. However, can this be maintained structurally? And we'll take a look at that with the charts. Has the market moved higher too fast, with a potential with longer term sellers waiting for opportunities to delever and take profits? We may be on thin ice this week, over the next 2 weeks as well, with the Russell closing negative, and we'll take a look at that toward the latter part of the video, as the Russell tends to kind of lead overall indices structurally and fundamentally as a potential for the bears to step in. So as we begin this month, we'll take a look at the monthly charts on the S&P 500, is where we start always on our videos. So we'll take a look at our monthly chart here, and we can see we have continued to push higher pretty consistently over the last 3 months. Now, as we said, can this be maintained as we move forward? Potentially, yes. The market can stay very, very bullish in one direction and very, very bearish in another direction, longer than you can stay solvent in regards to your projections. So as we see forward, this is not a bearish call on the S&P 500 nor on the Nasdaq, but we could be getting to a point where we are moving too high in prices as we continue to extend outside of value. This broad area here, there is a potential opportunity, at least on the monthly chart, for the longer term players, the larger institutions, looking for opportunities to potentially delever and take risks off the table, looking for a pullback to kind of re-enter. However, we've seen some pretty consistent movement in a broader pattern over the last 3 years. In front of you, you have a 3-year monthly chart. You can see clearly here a bullish trend, pullback, and then a continuation upward. Now, that's a classic ABC pattern, as they call it. However, there is a point where the bears will step in to look to potentially step in as the bulls look to take some profits and move back. Now, we have pretty consistently over the last few months been in a larger trading range, and just this past month we've broken out of that trading range here. Now, is that an opportunity for us to continue to look forward in looking for some opportunities for this to kind of happen, roughly where if a bull stepped in toward the bottom, they might be looking to exit with at least double their entry profit to get a 2-to-1 risk reward ratio. So that is something we should take a look at on the monthly, but we still are continuing to be very, very bullish as we do break out of our longer term channel, which we'll kind of highlight here for you here. And there is an opportunity for us to continue much, much higher. But I do believe over the next 2 weeks, we will look for the bulls to begin to start selling, which would give us an opportunity for the bears to step in to take advantage of that. As we shift over to the weekly chart, you can see this a little bit clearer on how we've consistently broken out of this longer term channel that we've identified. But is there an opportunity over the next 2 weeks to come back to potentially retest our value area high, roughly about $302, and then look for an opportunity for us to kind of continue on? We've moved very aggressively upward over the last 4 weeks, and is this an opportunity for us to see if this can continue forward? So just want to kind of call out a higher probability that we won't see as aggressive price movement upward over the next few weeks, given that we have moved up very, very aggressively and are so much further away from our moving averages that there is the high probability of some selling to take place. And we do have a number of gaps in regards to prices within the auction over the last few weeks that look to potentially be filled as the auction continues to try to be structurally sound. Fundamentally, as we stated at the onset of the video, corporate earnings are very much strong and continue to push us much, much higher, as the S&P just in this past month has increased just short of 2%, coming in at 1.88%, but a huge range of price, roughly about 19 points, a little bit short of 20 points in a short period of time. So that's a very, very aggressive move, but I don't believe it necessarily can be maintained. But at the same time, there has been a large amount of volume at higher prices, so that could be an indication structurally that we might see another leg up. Now, we are targeting roughly about a 312 price for us to take a look at potentially beginning to shift our mindset over to a shorter term perspective. But this last week, very, very aggressive on the S&P with a pretty good range of almost 4 points. So that's something that we did need to kind of carry forward as we look at coming into the holiday season as an opportunity for institutions looking to delever as individuals look to take vacation. So a lot of time on the S&P, but I feel it's a leader across all the indices, and this is an opportunity for us to kind of dig in a little bit longer as we step into the front side of the month. Now we'll shift over to the Nasdaq, and we'll jump back to the the monthly chart there to take a look at what's been taking place there as well. So again, structurally, we have stepped outside of our longer term channel, and I'll call that out for you here just so you can kind of see it as an opportunity to kind of highlight the strong bullish nature, and again, a very similar pattern that we've identified in the Nasdaq that could continue to push us much, much higher. But we don't want to get ahead of ourselves, as again, just very similarly to the S&P, the Nasdaq has been in a very strong trading range over the last 4 months with just a short-term burst in this come November. Now, the key there is that can that be maintained? Potentially, yes, but I do believe that there is going to be some opportunity for the bulls to take some profits. Now, we have seen very consistently upward higher highs as well as higher lows, which is a very solid indication of consistent bullishness. Now, at the same time, we have seen lower volume on a week-over-week basis in correlation to higher prices, as we see here at the bottom. We have seen a trend line that has been going lower in regards to volume on higher prices. So that's not necessarily an indication of new buyers stepping into the market. This could be an indication of shorts being kicked in and kind of a short squeeze where we've just gone up, 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 kind of this firecracker effect in regards to moving upward. Now, at the same time, as the market goes up very quickly, it can go down very quickly as well. So just in the last month, the Nasdaq has increased roughly about just short of 4% over the month. So very, very aggressive movements in a range just over 4 points on this ETF. Now, can that be maintained? Potentially not. We don't necessarily believe that there will be a larger pullback, but there is an opportunity to kind of see this trend line being tested again, with the bulls taking an opportunity to look for an opportunity to step back in, probably about the $195 amount, and that lines up to our value area high for this potential for some price movement to continue to move lower, but at the same time, an opportunity for us to wait and enter in for a longer term position. So again, we're not going to call shorts as of yet on the S&P and the Nasdaq, but as we move on to the Russell, there is an opportunity for us to take a look and analyze that, as the Russell tends to be a leading indicator and closing very negative on this week when the other two indices made all-time highs, including the Dow. So I would say 3 indices made all-time highs this past week. We do want to take a look at the Russell. As we shift over to the Russell, which is 100% weighted toward US-based companies, we can see here on the monthly chart, we did tap and touch with a little bit of a pullback as we hit our value area high over the last 3 years. You have a 3-year monthly chart in front of you here, which you'll see on the weekly chart aligns with the larger trading range that we have seen in the Russell pretty much all of this year. So this is kind of a higher probability trade that bears will continue to step in and look to sell, as the bulls have seen a very bullish run over this past month of October in regards to the Russell just moving over the month a significant amount of percentage, as well as a very high range of points, just short of 12.5 points in range in the Russell, and roughly about 2.2% price movement upward. So we'll take a look at this as it does somewhat coincide with value area high on the monthly, as well as value area high on the weekly chart as we step over to that. Now, as we switch over to the weekly chart on the Russell, you can kind of clearly see just that much more in detail, a very aggressive movement of price over the last 4 weeks. However, we did close the end of the month just short of value area high, roughly about $158 level. But just in this past week, we have seen a clear push upward to try to test rehighs as other indices have exceeded their all-time highs. The Russell has actually failed and closed on its lows as a somewhat of an indication that there could be a turn from a bearish sentiment moving forward over the next week, with a clear bearish signal for your sellers to kind of step in. Now, we were not able to close back inside of value, which is an indication that there still is a stronger, longer term trend that's intact. However, the bears will see this close this past week as an opportunity for looking to step back in to sell. So we do anticipate coming into this week that the bears will try to take control and definitely try to retest this value area high, but then also retest this longer term trend line here. Now, if we do see a step back into value, there is a clear opportunity for us to kind of retest, certainly down to the point of control, which comes in at roughly about 155, but then also coming all the way back down to kind of retest the bottom part of this overall trend line. And that's something that we clearly want to watch to look for longer term profit targets. Again, the market has moved very, very aggressively over the last month on very positive news, breaking out of its overall trading range, but still within the Russell, we still are much in a longer term box. And we still see an opportunity for us to return back inside that box. Now, if that does take place, we will see a rotation back down towards the lower part of that trading range as some price target. So we will probably be stepping into the Russell from a bearish perspective this week, but we will monitor for continuation downward if we do see some positive results, and look for opportunities to increase our position for a potential rotation all the way down to the bottom of this overall box. Now, the market tends to kind of move in consistency until it doesn't, right? It sounds very ambiguous, but that's exactly what it does. So this is a more visual reference for our intermediate traders as well as our shorter term traders as an opportunity. But at the same time, the Russell tends to lead the other indices as opportunities to kind of move broader sentiment, albeit from bullish to bearish or from bearish to bullish. And we do see a clear bullish signal, or excuse me, bearish signal here that we do want to watch and monitor moving forward. So we'll take a look at that, and we will communicate pretty consistently on our Facebook page, which we'll put a link here toward the bottom as well, where we do post videos and chart analysis on a weekly basis. So we thank you for all of our followers and all of our feedback, and this is an opportunity for us to step in and try to make some additional money throughout this week on the Russell. So this could be an opportunity for us. So we'll take a look. As with always, we'll try to keep this video short, and as with always, it's your money and it should be under your control. Take care.